Joining us today for our webinar on Minnesota paid family and medical leave. My name is Luke, and I'm a financial planner here at eWealth Partners. Before I hand things over to Brian and Connor for today's presentation, I'll just cover a couple of quick housekeeping items. If you do have any questions during the webinar, please feel free to drop those into the Q&A chat. We'll kind of monitor this throughout and either try to answer questions as we go or at the end of the presentation. We also will record today's webinar, so we'll make sure to share that with anyone in attendance today. Today we'll focus on everything you as a business owner need to know with regards to Minnesota paid family and medical leave. Taking us through the presentation today will be Brian Adamick. Brian is founder and partner here at eWealth Partners and brings a whole wealth of knowledge, helping business owners navigate all types of challenges with paid family and medical leave being the latest example. Additionally, we'll finish with a Q&A session with Connor, myself, and Brian. Connor's another financial planner here at eWealth and brings also a wealth of knowledge to help out with all the questions we've got. So now I will pass it over to Brian to kick things off.
All right, thank you, Luke. All right, so let's talk about everyone's favorite topic, Minnesota paid leave. Let's first start with what is Minnesota paid leave? Starting with the basics, Minnesota paid family and medical leave is a brand new state program launching January 1st, 2026. So just around the corner. From your perspective as a business owner, it is not optional. Even if you employ just one person in Minnesota, you are in the program. Either through the state plan or by applying for a private plan exemption. We will talk through that later in the presentation. What it does is it gives employees up to 12 weeks of medical leave and 12 weeks of family leave per year with a combined maximum total of 20 weeks. During this time, employees receive wage replacement from the state and job protection, which is important to note, from you as their employer. Job protection meaning you're required to return the employee to the same job they left or a job that is equivalent in pay, benefits, and working conditions. The idea is to provide workers with income security during major life events, whether that's recovering from surgery, bonding with a new child, caring for a sick parent, or addressing a personal safety issue. And we'll kind of go through that more in detail in the presentation. All right. Some of you may be wondering, is Minnesota the guinea pig here? No, Minnesota joins 9 other states and Washington, D.C. in providing leave. California started the program back in 2004. Since then, more and more states have followed suit, including New York, Connecticut, Oregon, Colorado, just to name a few. What's different, though, is that Minnesota's version is one of the most comprehensive in terms of who is covered and how much leave is available. All right, so let's talk through kind of understanding a qualifying event of when an employee can go on leave. We have 2 different types, medical leave and family leave. Medical leave is for an employee's own serious health condition, including illness or injury or ongoing medical treatment, where family leave is going to be bonding, military leave, caring, and safety. So on the bonding side, think of that, having a child through birth, adoption, foster care, that qualifies as bonding. Military, think of like call up for like active duties, just as one example. The safety one going over that would be like related to domestic abuse, sexual assault, stalking. And the caring one of family leave is leave for care for a family member with a serious health condition. What is worth noting on that caring piece, the definition of a family member can be spouse, child, grandparent, aunt, uncle, and it could even technically be a neighbor. Just that's where I'll say Minnesota is their definition is a bit more liberal compared to some of the other states. In total, between medical leave and family leave, the max is 20 weeks combined in one benefit year. And on the state program, that benefit year is the first day that they qualify for pay, for the benefit pay, right? So it's not necessarily a calendar year where it might be that way on the private care side. We'll talk more about that, but just know it's 20 weeks in a benefit year, and the first day being the first day of that benefit year for when they qualify, if that makes sense. We'll go over that more in detail. All right, so how is this paid for? Well, it's paid through premiums. I think it makes more sense if we call it like a payroll tax because that's what it's going to feel like to business owners. Um, Premiums are shared by the employer and the employee, paid through a payroll tax. We're going to have additional slides on this, but just to give you a glimpse, large employers, their percentage is 0.88% of the employee wages, where half of that is covered by the employer, the other half is by the employee. A small employer, 30 employees or less, it reduces down to 0.66, where you can see on the slide here the employer portion is reduced in that case. Again, I have a few other slides that will really drive home this point. Before we go any further, who is eWealth Partners? For those of you on the webinar today that don't know us, we are a financial planning and wealth advisory firm serving small business owners. We're located in Minnetonka, Minnesota. Most of our business owners have less than 50 employees. And we say if it touches your business cash flow, it's going to touch the family cash flow. And we know how to plan around that. How do we plan around that? You know, a lot of it, when working with business owners, we do a lot of tax planning. With that said, investment management, insurance, estate planning, workplace benefits, including 401ks and whatnot. Topics that we cover, including Minnesota paid leave. If there's 401k plan changes, which there are some that are coming up that we'll likely do some webinars on. They just passed the big beautiful bill that has some tax code implications that we'll cover that in future webinars. And really, if we kind of go back to the COVID days when we had the PPP loans and the ERC credit, that we just became experts on that. So when topics like this are, top of mind for our business owner clients, we spend a lot of time. So all of us on our team, myself, Connor, Luke, John, the other business partner, we have spent many, many hours of research, reaching out to the state, attending other events that they put on just to become experts on this. So let's go back to Minnesota paid leave and understand how can a business owner become compliant. Because if you're not compliant, you're going to get yourself in some trouble. All right, so the first piece to just become and remain compliant is reporting wages and determine which employees are eligible. Secondly, selecting a plan, either stick with the state plan or apply for a private insurance plan. And again, we'll talk through that. And then thirdly, you need to inform your workforce. We'll tell you when you need to do that. And then lastly, we need to pay the insurance premiums, which will show you when that deadline is. Most of you business owners that have employees already have a UI account, unemployment insurance account through the state, and you should be good to go. If you don't, make sure that you register and you have an account because basically this is where this paid leave program is going to be utilized. And so just make sure that you have that account up and running. That's where if you're already submitting your wages for employees, for unemployment, they're going to use that to help determine the benefit for employees. So for a large majority of Minnesota employers who are fully covered by unemployment insurance, you won't need to do anything new to submit wage details for paid leave. So now let's just really understand what employees are eligible. All right, so most people who work in Minnesota are covered by paid leave. Eligibility isn't limited to full-time workers. part-time, seasonal, in some cases, even employees who recently left your business can qualify. Undocumented workers, youth workers, and new workers are also covered. And if you're self-employed, a freelancer, a gig worker, like a rideshare or delivery driver, something like that, you're not automatically covered, but you can choose to opt in to the program. If we go on the screen here, we look at the covered employees included, it says owner officers who draw a salary. So for a lot of the business owners that we work with, they are basically taxed as an S corp. And so in that case, they are drawing a salary. So they're an employee of their company. They are eligible for this, which is unlike a lot of the other benefits that we see where basically the business owner is not eligible, including like unemployment insurance. This is one where business owners are eligible if you're drawing a salary or if you're more of a, schedules like where you file your return on a Schedule C, sole proprietor, you would have to opt into this and then you would be able to become eligible for it. All right. So an employee is covered if they've worked at least half of the prior year in Minnesota, or if they live in Minnesota but didn't work more than 50% of their time in another state. They also qualify. So even if you have someone who splits their time, if their primary work or residence is in Minnesota, they're included. Next, there's an earnings test. Employees qualify if they've earned at least 5.3% of the state's average annual wage in the previous 4 quarters. So for 2024, that threshold is basically just about 3,800, 3,781 in 2024. So that's a very low bar, which means almost anyone who's been working part of the year will qualify. I heard one of the other webinars, like even your part-time employees are eligible, and that's really the case, right? So that 3,800 number. And we'll get a new number when they release out the updated average wage base. I think that comes in October. But using 2024's number, again, that's 3,800. Finally, coverage doesn't kick in immediately. An employee must be with you for at least 90 calendar days before their coverage begins. After that, they're eligible to take paid family medical leave if they have a qualifying event. All right. Now understanding the wage payments to employees, the benefit that that employee is collecting. The way that the state, calculates this benefit, I mean, as you can see on the slide there, for weekly wages between 0 and $711.50, you get paid 90%, and it keeps on going down through that. That's confusing. This next slide will make some sense of it. The max weekly benefit is $1,423. But this next slide will make a lot more sense. The other thing worth noting, as you see in the bottom there, employers can decide to provide supplemental benefits to employees, topping off their pay to bring payments closer to their regular salary. So as an employer, you have the opportunity, the option to top them off to get closer to 100% of their gross pay. Or the employee can choose to use some like paid time off to get to that topping off number. We can't go in excess of that gross benefit. And essentially the state or if you would move forward with a private insurance carrier, they'll tell you what that number is. But that's just a consideration both on the employer side and the employee side. All right, so this slide, let's look at the far left column. If we look at just basically examples of an employee wage compensation, like annualized. So as an example, let's look at 50,000. 50,000 that employees making, that ends up being $962 a week, right? Now, if they would go on paid leave, what they would receive is $805.37. That represents 84% of what they were normally receiving. So now let's go to basically, you'll see that kind of like the maximum benefit would be someone that is at, I shouldn't say the maximum benefit that way, but like at 100, 103,000, you see that on the paid family medical leave. So if we look at the 103,600, anything after that number, the percentage of salary is going to continue to drop down. So 103,600, they're when they would go on pay, they're receiving $1,423, which represents 71%. If we go to the example of someone making $200,000 a year, right? That's where we're capped out at that 1423. So that represents 37% of their pay. So, you know, if the employer chooses not to top off any additional benefit, you'll see that like a high wage earner, they're going to be missing out on a lot more kind of benefit income compared to someone on lower income, 75,000 or lower, just as you kind of see that as a percentage of salary. So just kind of keep that in mind that I think it's fair to assume that those making, I don't know, let's just call it 100,000 or less, when they have that qualifying event, they'll likely be taking, maybe the full duration if they're able to. Somewhat speculation, but I think that probably holds true. All right, let's circle back to premiums. The under the state plan, the premium actually, and even the private insurance plan, the premium is split between the employer and the employee. The employer must cover at least half, but they can cover more if they so choose. That's really just for the large plans. I have a slide on this that will make sense. Because that smaller plan, 30 employers or less, the rate is reduced. So, just to kind of highlight a few things here. So, if you're a large employer, 30 employers or more, the total premium rate is 0.88%, where the employee pays 0.44%, and then the employer pays the other 0.44. On a small employer, they get a discounted reduced rate where it's 0.22, but the employee pays still that 0.44. As I mentioned, the employer could pay more. As an employer myself, I don't know maybe why you would do that. I don't think that's a great incentive. It's a nice gesture, but I think most employers are going to pay the minimum that they have to. The other thing that is worth noting is the premium rate is applied on wages up to the Social Security cap, which in 2025 is 176,000. So just like if you are high income, say making 200,000, you stop paying that Social Security tax at 176,100. In the same case for this Minnesota paid leave, you would stop paying the paid leave premium at that number as well. All right, so let's dive into the small employers. This is where we work a lot with more of these smaller employers. Um, and that's where a lot of them will, if you're 30 employees or less, and the average wage of all employees is 150% or less than the statewide average. The statewide average in 2025 is 107,000. Okay. So those two things have to apply. So maybe some like service businesses and I don't know, law firms, CPA firms, or like architecture firms, they might have a higher wage base, average wage base, but probably a lot of the other smaller employers, they likely wouldn't exceed that, but you'd have to kind of do the math on that piece. But then you'd have to be 30 or fewer employers. And then you would get that discounted rate of 0.66. Okay. So now let's look at this chart. We're just basically looking at the difference between the standard or a large employer and the bottom as a small employer. And on the total payroll side, let's just look at 2 million for both of these examples. So as a large employer, that $2 million payroll, the employer pays 0.44%, so that's 8,800. The employee pays that 0.44%, which is 8,800 for a total of 17,600. On the small employer side, at that same 2 million, you can see they're paying 4,400, not the 8,800 that the large employer was paying. Where that employee is paying that same portion, that same 0.44%. All right. An additional benefit through the small employers have through the state plan is grants will be made available from the state to support small business during an employee's absence, where the benefit could include funding up to $3,000 to help hire temporary workers or increase existing workers, um, the workers' wages to substitute for an employee. Luke, I can't remember if we have a slide on this, but we were just talking about this earlier. What was like the total amount that the state committed to?
5 million in available grants, so just under 1,700 total, assuming they're all getting that total 3,000.
Yes. So this is likely going to go pretty quickly. Um, so just know that if you have an employee going on paid leave, you're going to want to file for this grant pretty quickly if you're on the state plan. All right. Now here's the big decision. Do you go with the state plan or the private plan, the private insurance plan? If you do nothing, you are auto-enrolled into the state plan on January 1st. And really, I guess technically you're kind of auto-enrolled because you got to make that decision by November 10th, because you can apply for an exemption by that November 10th date if you want to use a private insurance plan. The private plan must meet or exceed the state's benefits, and must also meet the same cost to employees, no more than the state plan, and cover all employees. Plans can either be fully insured through a carrier or self-funded. We don't work with too many employers that would consider self-funding. Some of the larger employers, I'm just going to take a stab and say a couple thousand employees or more. They might do that. They're just doing that with some of their other insurances, but usually it's considering a private plan through a carrier. And so as you see on the screen, it's simply the private plan has to be equivalent or better than the state plan. Well, insurance companies, they're basically to make the benefits look identical to the whole Minnesota plan. The difference is the carrier, the insurance company, they manage the claims, compliance, and employee education around it. And this is where employers may find advantages with the private insurance plan. So it's one thing to note, we have this on our end of our slide too, is it makes a ton of sense to get a quote to see if a private plan makes more sense for you. Um, there is I guess we have this on the next slide of what a potential premium rate would look like, but the possible private plan advantages include potentially a lower premium rate, especially if your workforce is considered lower risk. The claims process is already established. These carriers that have been doing this for years, think about the California 2004, whatever it was, they've had these private insurance plans around for a while now. It's likely that they'll get a smoother, predictable experience compared to the state plan that is just, starting. And you also have access to dedicated resources. That means real people can help with the compliance claims and account questions. Or instead of being stuck on hold with the state, you'll have a team that knows your business. And then private plans usually offer online claim reporting and status updates. So both you as the employer and the employee kind of know where things stand. It's more of a one-stop shop. And some of you might be, using other disability, short and long-term benefits through a carrier. So that should be considered. All right. And we just don't know I mean, they're definitely, the state has invested a lot of dollars in kind of rolling out education around this. But they have to hire quite a bit, and this is effective January 1st. And so just the rolling out of anything, especially kind of a state-run program, we all kind of have, we'll just say, our concerns if it's going to be smooth. So to be determined on what this looks like. A private plan so this is what we're finding out in the marketplace. A private insurance plan may be a reduced rate compared to the state plan. So I guess we'll say more affordable. If you have 24 or fewer employees, employ 40% or more male workforce, and you are not in healthcare, not in social services, not in auto dealer, not in transportation. So if all of those hold true, 24 or fewer employees of your workforce, it's 40% or greater male, not in healthcare, social services, auto dealers, or transportation. What we're finding is that total premium, non-guaranteed there, but it's coming at 0.59. And so in the case directly comparing it to the state plan, that for 30 employees or less is at 0.66, right? And so you can see here that you can still push that same 0.44 off to the employee. The 0.15 would reduce the employer piece, right? One thing to note, as you see on the bottom there, the private plans are ineligible for those small employer grants that we talked about. All right, so how to apply. So one is we can help you, our team, just get a quote to see what that looks like. We'll require an employee census and wage details. We don't need like socials or date of births or anything like that. I think it's just the employee's annual wage and male, female to get a quote. And then we'll get a good idea of what they would price that out at. And then if it makes sense, then we would apply. As you see here, that when you do apply, if we want to move forward with that, the state does charge an application fee ranging from 250 to 1,000, depending on employer side. The smaller employers, of like kind of, we'll say those 30 employees or less, it's going to be closer to that 250 rather than 1,000. And again, the deadline to file this exemption with the state is November 10th. So you have to get your quote in your application and the approval through that insurance carrier. The insurance carrier then gives you kind of this exemption letter that you submit to the state. That is a deadline, again, of November 10th. All right. So let's now talk about key deadlines and when we're paying the premiums as well. Let me jump to that piece at the very bottom here, April 30th. So you pay these premiums in arrears, both the state and the private. So January 1st, it goes live. And for that first quarter, that premium payment is due by April 30th, regardless if you go to the state plan or the private plan. Okay. Now let's back up. As I just mentioned, October 31st is when we need, we're saying you should have your quote and have an idea of which way you're going to go, private plan or state plan. If you're going to go private plan by November 10th, you have to have the letter from the insurance carrier, like the application has to be approved with the insurance carrier, and then you have to submit that letter, basically requesting that exemption. From there, December 1st, you have to notify employees of your plan decision. Are you going with the Minnesota plan or are you going with the private insurance plan? January 1st, it goes live. So make sure your payroll is set up right to start collecting those payroll deductions, right? We'll have other webinars getting more specific on payrolls and make sure your payrolls are set up correctly. Especially a lot of times, like we'll have payroll where it's bi-weekly and you might have the last week of December and the first week of January. Okay, well, just make sure your payroll system knows that it's only going to be paying collecting premiums on starting January 1st. Okay. All right, so you can either go to our website, scan this code. This is if you want to have a free consultation with us. We just basically, help you make sense of it all, and then we can run a quote if that's where you want some help to kind of get a better idea of what that looks like. But if you just want to pick our brain, like I said, we've spent many, many hours around this topic, and so we can spend some time with you on that. Um, And just as I mentioned, we're going to have other future webinars on this topic. So we're going to get in, this is kind of what we're calling like the basics. In a couple weeks we have one with an employment law attorney talking kind of more of the compliance side from that angle. This is all on our website, and you'll see the future dates for the webinars. We're hosting what we booked Boom Island around not too far from our office to do an in-person event on this. So you could attend that. Later in the year, we're also going to do one, like I said, that's more payroll focused around this and payroll and tax piece. And then lastly, we're going to do other webinars, not just around this topic, but tax code changes, some of the rules and changes around 401(k) plans here in the state, and other topics that are relevant to business owners. So, is it time now, Luke, to turn it over to some questions?
Yep, we will knock out a couple kind of FAQs here, as well as if we have any kind of come in the chat as well. So feel free to throw any questions you've got in there. First, I'll kind of reiterate, we will have today's webinar recorded. We'll make sure to distribute that and any other kind of helpful resources to anyone in attendance as well. First question I can knock out here is what communication needs to be given to employees by December 1st. So employers will be required to notify employees of the plan and the corresponding benefits by December 1st. Additionally, they will be required to get attestation or written or electronic acknowledgement from employees that they've received that their benefits. And if they don't get that, they'll have to show kind of how they were sharing that information with employees. The state is going to provide kind of a sample letter here. So we'll make sure to share that as well. And then lastly, employers are required to post a workplace illustration about PFML in the workplace. Again, that's something the state will be providing, and we can definitely make sure to share as well. Looks like we have one question here. Do you currently have a broker that has helped us with insurance issues in the past? Can we use them for this as well, or is there a carrier you are going to be working with? Brian, do you want to take a stab at that one?
Yeah, no, yep. So that's either something we can help with, or if you're working with a broker in the past, especially if you have group benefits like with your employer, short term, long term, whatever, they should also be able to get a quote. One thing I always just say, like in our model, independent model, is just make sure that whoever you're working with is a true broker where they could quote out multiple insurance carriers. That's just kind of the thing to note on that side.
Yeah, great question there. All right, Connor, we'll kick it to you. A super common question here is, someone had a child during 2025. Are they eligible to take leave in 2026?
Yeah, good question. And the simple answer is yes. Employees are eligible to take paid leave for a child that's born in 2025, provided that the start date of leave begins after January 1st and that the leave is taken 12 months after the date of birth. And the state will begin accepting claims for bonding leave starting this November 2025 already. So good question.
Yeah.
And this might be, I can't remember if we touch on this later, Luke, or not, but maybe just like giving an example to the audience of, so if someone, let's say they had a child, adopted a child, foster care here in 2025, and let's just say it was March 1st when that qualifying event happened, right? They have all the way up until March 1st to use that family bonding benefit, right? We're
Correct.
supposed
So
to.
in that situation, yeah, they would basically be eligible for what is it? Essentially 8 weeks, through January and February. But yeah, they would have to take that leave before March 1st, 2026.
And if they instead it was July 1st of this year, well, then basically they have to use those 12 weeks before July 1st of next year. So we're telling employees just be prepared that some of your employees might utilize this January 1st, especially kind of on that family bonding side. And what did we find out too? That if like an employer has through FMLA coverage, and they basically paid out, the 12 weeks or so in 2025. The employee would be eligible for another 12 weeks in 2026. And so,
Yeah, essentially, yeah, the state's looking at it like the program starts January 1, 2026, and any benefits that were paid out before that um, are essentially irrelevant from the, eligibility for PFML.
yes.
All right. Another frequently asked question here is just about will payroll be submitting the premiums? This will definitely depend on payroll providers. Our understanding is that for those on the state plan, this will function very similarly to unemployment insurance and kind of be paid on the employer's behalf. That said, for those on the private plan, our understanding is that you'll still need to go into the portal, April 30th and make those premium payments. But definitely something to kind of clarify with your individual payroll provider. And like Brian said, we'll definitely be providing more resources on this as the year end comes. All right. Connor, you want to tackle the intermittent leave rules, which I know we actually have a slide on because that's been a very common question that we've gotten as well, and sort of the rules around that.
Yeah, absolutely. Yeah, we create a slide just because we're seeing this being such a popular topic. So, what are the intermittent leave rules? Basically, employees are allowed to take intermittent medical leave if they have approval from their doctor or medical professional. So, the way I think about this is if they have to have treatment every Monday from 9 to 11 in the morning, they can do that with permission from the doctor, medical professional that they're seeing. For family leave, it's a little bit more of a gray area regarding the rules. According to the state, intermittent leave must be taken, they say, like in increments consistent with the established policy of the employer. The state does require that the employee make a reasonable effort to schedule leave so as not to disrupt the operations of the employer. However, if the employee and employer can't agree, the employer cannot require that the employee change their leave schedule to accommodate the employer. So all that being said, it sounds like the state will take into consideration any information that the employer provides when approving or adjudicating claims. So like, for example, if the employee never told the employer or gave them like absolutely no notice about it, sounds like the state will kind of work with them and give some consideration for those instances. So still kind of a gray area, but we'll continue to track updates on this as we learn more. But good question.
Yeah, it might be a place like on that family, like I'm just gonna say the bonding piece, if there's the 12 weeks where maybe the employee and the employer can work together on the intermittent, right? If you know that there's busy seasons throughout the year and with their family and it works that that could work for both employer and employee, that might relieve it a little bit compared to if they just took 12 weeks consecutively. So I would just start thinking through that too. But yeah, that's an interesting way of how they're handling this.
Yeah, absolutely. All right, and last FAQ we've got here, unless we got any other questions going into the chat here, is just on if self-employed individuals can enroll into the program. The answer is yes, as I know Brian kind of alluded to earlier. Self-employed individuals can opt into Minnesota paid family leave. Just if they choose to do so, they'd be responsible for the entirety they'd be paying the 0.88% premium, and that would be based on net earnings shown on their prior year's tax return. This would also be what the state uses to calculate their benefit amount, would be off that net earnings number. One kind of caveat to note with self-employed individuals opting into the program is they would be required to stay on the program for 2 years. So
Okay, so that brings up a couple other pieces. So self-employed, think of, if your tax return, if you're filing your business income on a Schedule C, right? You have to opt into that whole piece. And that's basically looking at your net profit from that to figure out the premium wages and then also your benefit. Okay, that's the first piece. Two, as I mentioned earlier, this is something that business owners that our employees can also qualify for. And with that said, you as the business owner, the employer can have, supplemental pay where you're topping off. So you might have a business owner that qualifies through the medical or the family side, and then the business could make supplemental payments to get them topping up to, 100% pay. We did ask the state, like, well, what happens, um, if the employer decides to do that to top it off, how do like the business, we'll call them draws or distributions, if those are paid out, does that impact the benefit? We were told no. So think of it this way again, business owners, like if there is a qualifying event, you qualify from this program, and same with on the private insurance side, collect the benefit. You can have a policy that tops you off to get you closer to that gross wage. And then in addition to that, if you are taking whatever, you might be taking monthly, quarterly, just whenever you want type of distributions, that isn't going to negatively impact the benefit you are eligible to collect. So just keep that in mind, because I'm not aware of many other programs that usually are in that sense like more business owner friendly.
Yeah, and just to clarify too, Brian, that last question that was mostly referring to kind of independent contractors, those who wouldn't otherwise be covered by paid family leave, but were, choosing to opt into the program.
Yeah.
So just wanted to make that distinction as well.
Yeah. So if you are independent contractor, Schedule C or whatever, um, and like for example, you're expecting a child, or maybe there's going to be some scheduled surgery or medical care or helping a loved one, you probably want to opt in. So think through that, and we can help kind of talk through that as well.
Absolutely. All right, Brian, Connor, any last words of wisdom here before we end today's webinar?
No, just that we'll stay on top of this. We've been attending a lot of the Minnesota kind of sponsored events, and see if there's any new information on their side. But just best ways is probably well, we'll be pushing out information. You can go to our website, but we're to stay on top of this.
Absolutely. All right. Thank you everyone for joining. Have a great end of the week here.
All right.
Thank you. Yeah.
Thank you.